Your portfolio may have a beautiful equity curve, but that does not necessarily mean it is truly well diversified. If all your strategies trade and lose money at the same time, you may not have 5 independent strategies. You may simply have one big bet wearing 5 different disguises. That is exactly what Time Map can help you uncover. It is another practical plugin created by StrategyQuant community. Its author is Libor, and in this episode of our Community Tools series, we will show you how it can turn an ordinary portfolio into a clear map of when individual strategies trade, make money, and lose money. Let's see how it works in practice. In StrategyQuant X, you can overlay the equity curves of multiple strategies in a single chart. However, the result is often a confusing tangle of lines. It is quite difficult to tell when each strategy was making or losing money and whether the strategies complement each other or all decline at the same time. You can see the individual lines, but not the story of the entire portfolio. And that is exactly what Time Map solves. The plugin takes the trades from all your strategies and displays them as a clear timeline instead of a tangled collection of equity curves. Each row represents one strategy. The strategy names are shown on the left with the timeline along the bottom. Strategies are sorted according to how much time they spent in the market, with the strategy that has the greatest exposure at the top. Each colored rectangle represents one trade. Green means the trade was profitable, while red means it ended in a loss. At a glance, you can see when each strategy was trading and how it performed. A blue line runs across the map, representing the equity of the entire portfolio. Its scale is displayed on the right axis. The orange line represents pi as a benchmark, allowing you to easily compare the portfolio's performance with a broader market. You can turn the benchmark on or off using the SPY button at the top of the plugin. You can also adjust the display time period and, more importantly, enable or disable individual strategies. This is where the real strength of Time Map becomes clear. You can add strategies one by one and immediately see how each of them affects the portfolio as a whole. Installation takes about a minute and requires no additional setup. You do not need Python, a backend, or a configuration file. Simply extract the downloaded zip archive, copy the entire Time Map folder into the appropriate StrategyQuant X folder, and restart the program. A new Time Map tab will then appear in the Results section. Detailed installation instructions are included directly in the download package. Here, we have an example portfolio consisting of 5 strategies that use different trading approaches across different markets. Once we open the portfolio in the Results section and switch to Time Map, we can immediately see that each strategy operates at different times. At the top is an S&P 500 mean reversion strategy that buys price dips. Its trades therefore appear in dense clusters, mainly during periods when the market becomes more volatile. Below it, we can see an ETF rotation strategy. It forms an almost continuous green band because it remains invested most of the time and provides stable foundation for the portfolio. The Russell breakout strategy joins in when market trends begin to develop. The gold strategy has completely different periods of activity. It operates in a different market regime from equities, which may not be apparent from ordinary equity curves. At the bottom, we have a model based on VIX volatility. It remains inactive most of the time, but comes to life during waves of panic when equity markets are falling. It therefore helps precisely when the other strategies are taking the biggest hits. And this is the most important part of the entire map. Each strategy is active at a different time, allowing them to complement and protect one another. Look, for example, at 2008, 2020 and 2022. The orange SPY benchmark falls sharply, while the blue portfolio equity curve moves through these periods much more smoothly. This is not a coincidence. It is diversification across time, and Time Map allows you to see it at a single glance. The plugin also offers several additional display options. At the top, you will find a short guide explaining how to use it, an option to enable or disable the SPY benchmark, and quick controls for switching between different time periods. You can display the entire history or focus on the last 10, 5, 2 or 1 year. You can also disable all the strategies at once and then add them back one by one. This immediately shows you how each strategy affects the portfolio and whether it genuinely complements the others. Time Map changes your view of a portfolio from "it looks good" to "I understand why it works." You are no longer looking only at which strategies your portfolio contains, but also at when they trade. When evaluating a portfolio, look for 3 things. First, strategies that are spread across time rather than concentrated within the same periods. Second, drawdowns that overlap as little as possible. And third, ideally, a strategy that comes to life precisely when the rest of the portfolio is taking a hit. If every strategy turns red within the same time window, that is a warning sign, not diversification. You can download the Time Map plugin using the link below this video. Try it on your own portfolio and find out whether your strategy genuinely work together or simply look good next to one another. If you like this video and you want to see more, hit like and follow, and see you next time.